Hello and a warm welcome to everyone today at this webinar on Ichimoku multi-time frame systems in association with Alice Blue and AlgoBulls. So today I'll be speaking to you all on this wonderful study, Ichimoku. It's a Japanese study and it's been very well accepted in the Western world also, and gradually picking up in Indian markets also in a very steady space. It's got everything in it. We did not look at any other technical study or any other factor. It covers all aspects, be it uptrend, downtrend, the sideways market, target planning, breakouts, pullbacks, narrow range markets, everything. It covers all its aspects in one. So let's start going about it now. Now, before I go into the details, just a little bit of introduction about myself. I have been in markets now from almost more than 3 decades. And as a full-time trader, that is, trading has been my bread and butter since 2005. Been practicing Ichimoku and across from 2014, that's a good 7 years, learned from quite a few Japanese traders and some experts, and then from the Western world, and then read a lot of books on this. And I have also been training on Ichimoku and harmonic patterns, as you can see in my Twitter handle or in my blog spot, where I also speak about the other technical studies and also on risk management and discipline. Now, without trading discipline, without risk management, your future in markets is not, it cannot be great. If you are irresponsible, if you're a bit careless, or if you're clueless, it's very difficult. And more important now, because we are getting into automation, we are getting into intraday trading and all that, your discipline has to be much higher. Hence the automation, the algo systems are coming into place. So let's talk about how the whole thing progresses and how we work on it. Now, Ichimoku is a study which was developed in the early 1930s by a Japanese gentleman by the name of Goichi Hosada. He was a Japanese journalist, so he was not actually involved in day-to-day marketing. His main thing was being a journalist on capital markets. So he started working on this entire study concept, and it took him around 30 years to develop. He had a whole team working under. Imagine an era when there were no computers, so everything was done manually back then. And he made this whole study, the whole concept work, and after 30 long years, he was able to come to a conclusion then how the whole study works on different aspects. Now, what is the entire study of Ichimoku all about? The whole study is based on certain specific moving averages, but the way of calculating these moving averages is very different in Ichimoku than it is in Dow theory or any other theories. There are slight variations from there, and we work only on specific moving averages totally. Now, the unique part about Ichimoku is that not only do we get price, which most technical studies talk about price, Ichimoku study works also in the concept of time. In fact, as per the whole study by the gentleman, Ichimoku is nothing but a study of time. Price is just a consequence of that, whether it will go from A point to B point or to C point. It has to do it within a certain specific time. That's what the entire study works in advanced Ichimoku. Now, like I said, the whole study is based on, and he was called Ichimoku Sanjen, which in the Japanese term means a man on a mountain. So when you are at an elevated place or you are in an advantage height, you can see a big view, a bird's eye view, above the cloud, below the cloud, whether there is a balance and equilibrium, or whether there is disequilibrium, uncertainty in the market. So it's a one-glance chart. That's why we call it Ichimoku, a one-glance look, whether the market is trending, non-trending, bullish, or bearish. Now, like I said, we work on various moving averages. The various moving averages out here, as I've been marked out here for you all, I'll just talk to you all briefly about all of them. The first one out here, as mentioned out here, is the Tenkan line, which is so the Tenkan line. The Tenkan line is this particular line out here. It is a 9-period weighted moving average. Okay, so it's not exponential, it's not simple. It's a 9-period weighted moving average. It is the fastest oscillator in the entire study. So as the stocks progress, as the movement of a stock happens, this will also move fast with it. It's like a fast oscillator if you're using any other technical indicators, etc. So that's the first line of support in an uptrend, and the first line of defense, like the resistance line in a downtrend. The next one is the Kijun, which in the Western world we call the baseline. It's this one out here, the red one marked by me. This is also a weighted moving average, but while the Tenkan is a 9-period moving average, the Kijun is a 26-period moving average. So again, a weighted one. It marks the main trend of the market. If the stock or the index we are talking about is in an uptrend, this one will be suggesting a signal accordingly. If it is in a downtrend, it will be pushing a signal downwards. Price would be pushing below that. Or when the price goes, very far away from it, it gives a signal of that now the market could get into a narrow range or pull back. We might see a correction happening. So that's the amazing part of the Kijun, that it does the job which other moving averages do not do. It has that ability to give you a signal of that. And with advanced Ichimoku, we can time that move, that how long will a corrective take place? How long would a sideways range work? Then there is the Senkau A, or the lead line 1, which is again a moving average, but this time it's the average of the Tenkan and the Kijun out here. So it's like a child. It's the offspring of a Tenkan and a Kijun, but in Ichimoku, we plot it ahead. We are plotting it 26 periods ahead. Hence, it's also called in the Western world a leading line. It's a lead line 1 because we are plotting it ahead. The next one, the Senkau B, is the lead line 2, which is just like the Kijun, but while the Kijun was a 26-period weighted average, the Senkau B, or the lead line 2, is based on 52 candles. So where this is 26, this is a double of that, 52. Hence, it is much more slower. And you can see out here in this chart that the Tenkan, the Senkau A, or the lead line 1, keeps on rapidly moving. It's hardly stable, hardly quiet. It keeps on rapidly rising, rapidly moving forward. Rarely do you see it go flat. But while the Senkau B out here, or the lead line 2, has much longer, flatter periods. And these flatter periods talk about the possibility of, if there is any decline in a stock, then these long horizontal lines become very strong supports for a stock to re-add, on the pullback. So they work wonderfully. They are, it's a much more stronger support base for the entire thing. Now, between the cloud, between Senkau A and Senkau B, or lead line 1, lead line 2, is the area in Japanese term, which we call Kumo in the Western world, we call it the cloud. The cloud is the area of uncertainty, because in Ichimoku study, a price which is above the cloud and has the following pattern, where the Tenkan is chased by a Kijun, and where the Kijun is being chased by a cloud, which is bullish, blue in greenish in nature, then it's a bullish setup. While if it was vice versa, it would be a bearish setup. So above the cloud, below the cloud. Like, it's just something which we also see in the Dow theory, where we talk about stocks trading above 20 MA, SMA, 50 SMA, 100 SMA, 200 SMA. So similarly, in Ichimoku, we don't look at so many moving averages. We just keep it as simple as possible, that the stock is above the cloud, or is it below the cloud? Number one. Number two, is the order correct? Is it moving in the perfect order? Fantastic. Now the final line as you can see out here, is this black line out here. This is called a lagging line. Now, like while this was called the lead line, this is called a lagging line. Now, why do we call it lagging line? Because we are plotting the a line chart. Now, this is a candlestick chart, or you could have a bar chart out here. This is a candlestick chart, a line chart, which is being plotted 26 candles behind. So 26 behind, 26 in front. That's a very important number in Ichimoku. So the whole thing is plotted like that. So this particular line that you see out here, the Chiku or the lagging line is a measure of momentum. So it is what we call a gear in a automobile, which will decide the thrust. How good is the movement? How fast will the stock move? So imagine as you're an intraday trader or you're an option trader. And in options, when you're on the buy side, you want to see a good movement coming, else there is a decay factor which will eat away your premiums when you buy a option, be it intraday, be it positional. So the Chiku or the lagging line helps us in deciding the factor whether the movement or the breakout is going to be good or not. And that's the case out here, as we can see in this chart, that how quickly the move has, this whole move, the Chiku has got nothing in front of it, and it just takes off out here. Here we can see that the Chiku is getting obstructed by the cloud, by the candles, hence the stock is in a mess out here. It doesn't give a movement. So the Chiku works as the momentum, while the other moving averages come together, they align in a proper manner and give us our breakouts, our pullbacks, our breakdowns. So in all, a one glance chance, we don't need to add any other indicator. We don't need to look at any other factor, and we can continue to trail our winners one by one in that manner. So it's what does the whole study do for us? And now, I have been, I look at it from an angle where I can mix all the time frames together, a higher to a lower time frame, align them in a proper order, and look for a trade direction. So from the daily, I come to know what is the main trend of the day. For example, like today was a gap up day. The hourly helps me in planning the trade. That can I enter the trade now, or is it too late? The 15 minutes is where we buy and sell, based on how the setup is. And the 5 minutes just gives us an immediate confirmation of reducing our risk. Now, this is the entire intraday setup in which we manage our trades. Now, this is a small example of Bank Nifty. Now, the whole setup, this is the first buy signal out here, came out here when the stock went above the cloud and everything was in alignment. The Chiku is free for a move out here. The stop loss is just below the cloud out here. The movement kept on moving. It took the trail stop loss out here. That's a 5 minute trade. Again, it gave us an opportunity to buy again out here. Again, Chiku is free. Kumo is bullish. The Kijun and Tenken line are in line, slanting upwards, and the trade has given us a continuous run without even bothering to test the trail stop loss. That's the beauty of the whole system. It takes out all the dilemma, all the tension, all the impacts that, now should I book profit? Now this is what you call my trail is going to hit. Now it might turn, all the social media noise that you get that you need to book profits. It's at this, at that. All you need to do is let the system handle for you. That Ichimoku as a whole course completes the job for us. Now, this is a sell signal, so it's not just on the buy side. And like I said, above the cloud, below the cloud. Now, here is one case where Ichimoku made a good spike, came down. So we wait for the system to give us a sell signal. We are not in a hurry to try to predict tops and predict bottoms, etc. We want to be with the breaker, with the momentum. We want to be with a stock which is going to give us a faster and a good, decent yield. So here we have, this is the breakdown point out here. I have a future Kumo and everything is bearish. like I said, the pinkish one is the bearish one. I have an alignment downward now. Like I said, in a downtrend market, the line of resistance will be Tenkin, then will be the Kijun. So here we have a down move. So I have an entry out here. I have a stop loss out here, just a little bit above it out here. And then I run the stop. And you can see how well it has run all the way down till here. We have a proper move coming down there. So from an entry at 2885 down to 2855 intraday. Now this is just talking in purely in the lowest time frame, 5 minutes. Imagine trying to do this in 15 minutes. Imagine trying to do this in positional trades and running it. And imagine trying to do this across all time frames. So we are able to generate moves like that in all time frames and work on this aspect. And more importantly, now because I'm talking about intraday, I'm talking about lower time frames, there is this tussle we always have with us about our emotional side or about our bias when we trade a stock. Oh, the market might not fall now. Oh, the market is going to fall now. I should go bearish and all that. So till the system, when we let the system trade for us, when we let the entire multi-time frame setup give us a signal and we go for a trade accordingly, it takes out all our bias. It takes out all the hesitancy that we have in our system, and we are able to generate trades according to the setup and automate it. And after that, we just let the Kijun do the trail part for us in a trending day. So even if, of course, we get our trades wrong also time to time, but when we do get it wrong, which will happen, which will always happen, the risk is minimum. So in terms of risk reward, we are doing excellently well, number one. Number two, it's not practical in the lowest time frame to monitor so many stocks. So when the automation comes in, it just picks up all the the liquid stocks, the index stocks, and it gives us our moves accordingly. So let's try to pick up one on the screen right now on how it's going. So this is the Nifty scenario today. Now, let's have a look at how the whole thing was looking today intraday. So here we had a daily candle, a bullish breakout. The hourly is bullish. The 15 minutes was also bullish. Now let's see how the 5-minute candle was working in Nifty today. So after a bullish start, because the Kijun went a bit far away, it remained sideways the whole day. It did not give us a buy signal, and at the same time did not give us a sell signal. So many a times when we are trading, it becomes a hazard for us whether I should go long, whether I should go. So like Jesse Livermore said, that there is a time to go long, there is a time to go short, and there is a time to sit out. So during such days, during such periods, in spite of such a strong day, the index and the intraday was not giving us a very good signal to trade for intraday at all. So when Ichimoku, that becomes much more easier for us to recognize whether the trade validity will work today or not. But the same thing, if I go on Friday, which was equally a strong day, how it worked on Friday. Look at the breakout out here on Friday. This is a perfect breakout out here at 18,334 with a stop loss at 18,302. That's a 35-point stop loss. And look at where we ended. We ended at 18,363. So small moves out here. Then there was another move out here on the 13th itself. Massive gap up. Went sideways because of this Kijun being flat out here. Didn't come out that well out there. Now, let's see how did Bank Nifty look, which was the stronger player for the day. Out here. Here we go. So here we have a Bank Nifty trade on the 14th. Okay. So here we have a breakout happening out here above the cloud. Chiku is free for a big move out here. There's nothing to stop the Chiku out here at all on the 14th. And the move starts. Now this move, like I said, has a Kijun trail stop loss. Now, the entry has happened at 38,963. And the stop is at 38, 860, 868 out here. That's the stop we have. In this trade. That's a 200-point stop. And look at the move thereon in the stock. It's been a smooth move. We've been moving, and even at the end of the day, we are sitting at a good profit of 400, 500 points. So that's the beauty of Ichimoku. Again, here today, in spite of such a strong day, when you look at the data today, it looks like, Bank Nifty was solid. The main solid part came from this gap up out here. But after that, it kept on a range bound. So in that range bound, Ichimoku helps us to get that early confirmation that do not fall for this today. Let the range bound get over, then look for a trade with the direction. So eases out all the doubts in mind, and with automation, it becomes much more easier to catch on to a trade. Now let's look at some of the big movers of the day from the Nifty point of view. So today's big mover was Hindalco, Infosys, Tech Mahindra. So these are, most of them were gap up stocks. So let's look at something which did not gap up today, went up smoothly. So let's look at ITC, for instance. So there you have ITC. Good strong start, pull back, momentum again starts from here. So you get an entry at 259 on the intraday chart again. So this is morning gap up opening after the consolidation. The system will pick up the trade only here. It won't bother to pick up this trade. So manually, you'll have a problem with that. You might get tempted. Should I not? Should I not? But the system will pick it up here at 260. It gives you an immediate quick rally till 263, does some consolidation, takes one stop loss here, and then again picks up another trade out here for a quick small spike before close, like that. Let's take a look at some of the weak stocks today. So imagine a day like today, we can look at the weak stocks also. So M&M saw some profit taking, or say HCL Tech. Let's look at HCL Tech. Now that's HCL Tech. Daily is down, so the direction is down. You know that. The hourly is also giving us a sell signal. 15 minutes is where we will be looking for a trade entry. The 5-minute is where we will minimize our risk in the trade. So here we have a trade at 9:30 at 1240, and in the 5-minute time frame, we're doing that trade out here, 1240. We have a trail stop loss sitting at 1252. And the system takes the trade all the way down. Of course, it did go down, but the system would take a trail stop loss here at 1232 out here. It would regenerate another sell again out here at 1228 for all the way down and again back here. So again and again, the advantage of the system is A, it will only look for momentum. B, it will look to continue to look for a trade in and out, a scalping kind of trade across the spectrum in the stock. So double advantage looking at it from intraday point of view. Now, the same methodology, the same way to do it would also occur in the positional way. So for example, let's look at Apollo Tyre. Now, Apollo Tyre came out of a triangle in the hourly today, triangle in the hourly. So this is positional. So it gives us a spike now in the 15-minute right here. So that the system would pick up this also for us, and look at the move after that, all the way up to 250, all the way. So that's a good spike the system picks up for us, and it continues doing that job, takes out the emotional factor in intraday, and also in positional, it works like It does all the job. I don't have to look at any other factors or anything. It just does the job for me. And of course, with advanced Ichimoku, I can calculate the approx time the trend would run. I can calculate measure the distance it will go, and accordingly increase and decrease my risk reward. So in short, this is Ichimoku in a very, very short span to explain. For detail, you'll have to consider the courses or get a book and read and all that. So now I would like to take your questions, if any, on the topic. Yash, you could take over from here and ask.
Yes, Dinesh. Firstly, thank you, Dinesh, for such a really amazing introduction and for such an insightful session. So during the session, audience, I think so, Mr. Dinesh constantly pointed out that there is automation needed when it comes out to this pattern. So I actually wanted to introduce you to our platform, which is AlgoBulls, where we can help you automate the overall solution and the overall pattern within the solution. So let me just share the screen and actually showcase your platform. Yes. So I believe my screen is visible to everyone. Mr. Dinesh, you can give me a confirmation on this.
Yeah, I can see.
Yes. So this is the platform we guys have built, which is called AlgoBulls, and we guys are unleashing the power of automation with the help of algorithmic trading. So we people have ready to use strategies on our marketplace where you can just go click and actually start trading. And we guys have automated this end to end. So we are a fully automated algorithmic trading system. And we guys operate on NSE, BSE, MCDX, and NASDAQ and NYSE is currently under the beta mode, and we'll soon be live with the international algorithmic trading option too. Apart from that, algorithmic trading previously used to be lack of automation, lack of there were very less exchanges live with algorithmic trading. Many people didn't know about how to go ahead with it, code Python, code PineScript, and etc. Wherein we people at AlgoBulls are defining the space where we are making trading stress-free, end-to-end automated, connecting multiple exchanges, multiple brokerage solution, making a ready-to-use marketplace where you can directly access the strategy and making the overall process very seamless for everyone. So let me just take you through our marketplace where you can explore various different strategies, and let me just show you how you can get into the marketplace. So you can just type aliceblue.algobulls.com. This is the marketplace where we guys have partnered with Alice Blue team to actually provide this kind of algorithmic trading solution for everyone. And we people have our marketplace well defined into three formats, which goes from retail, premium, and HNI segment. So let me just show you what a strategy looks like and what are the kind of various different strategies which you can see on our marketplace. So on the marketplace, if I type premium strategies, you could find various different strategies currently live on our marketplace. And for instance, if I take a smart option buy strategy, when you expand on the strategy, you're going to find end-to-end details about the strategy. So the moment you open a strategy card, you're going to find the strategy's name, on which instrument the strategy is going to perform, what's the ROI of the strategy, what's the max drawdown the strategy has faced, and what's the buy part of the strategy, and what's the sell side of the strategy. You will also see the strategy code, what's the minimum capital required to enter in the strategy, what's the transactional charges required, recommended duration are the days, for how many days you can run this strategy, and what are the risk appetite you would need to see the maximum profit in a day, and the loss which you could actually maximum loss percentage too. Apart from that, you can see strategy. The strategy is being developed by AlgoBulls, and soon we'll be seeing Mr. Dinesh's strategy live too over this marketplace. And over in the details section, you will find end-to-end details about the strategy over our marketplace. Apart from that, anytime we people go to mutual fund, we see something called as the fact sheet, which gives end-to-end report, which gives us end-to-end report how the mutual fund has been performing. And in the same way, we people have a backtesting report, which is given behind all the strategy. And this backtesting reports gives you end-to-end insight and information needed to know about the strategy. So it will be showing you what is the ROI this strategy has generated over the period of its inception. What's the ROI in percentage? What was the max drawdown in percentage? Number of trades taken, number of win trades, number of losses trades, total. What's the hit ratio of this trade, and number of long trade, short trade, maximum gain in INR and maximum losses in Indian rupees, average profit win trade and average loss win trade. So I'm going to find all these details end to end onto the strategy showcased on our platform. Apart from that, when you talk about returns, you're going to find returns broken down from all-time returns to last month returns to last 2 weeks return to even last 3 days return, which has been calculated and updated on daily basis. And you're also going to find the trade book, wherein in mutual funds you see all the holdings. The same way in algorithmic trading, we people have something called as trade book, where you can find when was the stock last bought and when was the stock last sold, and what was the number of quantity entered and at what price did it enter. So for today, as you could see that today's date and time is already updated over here. So there are in today's total date there were 4 trades taken, one like 2 buy and 2 sell. So we can find similar number of trades since the day of inception. As since the day of inception, when was the first trade taken and when was the first trade taken and when was the last trade taken. But keeping a track of all this number of trades and getting that into graph. So we people do have a solution for that too, where we people have generated the smart insight report, which is going to show you what was the when was the number when was the first trade taken, when was the last trade taken, what is the number of profit, how is the number of profit it has been generated, and what is the number of losses it has given. It's going to show you PNL and percentage format too. It's going to show you ROI since the day one. As you could see from the start, it has been going positive. There was, of course, a small, there was this period of 15 days when the strategy didn't perform that good and it made some losses. But over the period of time, you could see that this strategy has performed really well over the period of times. Apart from that, you can see ROI in percentage. You can see equity curve as the minimum amount required was 22. So from 22, it has been going from 22 at max, it went to 16.87 thousand. Then again, it reached the height of 71,000 over the period of 1 year. Max drawdown the strategy has faced was of 3,000 rupees, which you could see it during the equity curve side over here. Apart from that, how you can actually execute the trade. So you can just click on execute button and this trade will be automatically added to your portfolio. And you could see that the smart option strategy is actually added to your portfolio. Now, before taking a trade, you would want to do the paper testing and back testing for it. So you can simply go on to manage strategies and simply add it to paper trading and back testing. And the moment you add it to paper trading and back testing, you can directly visit the paper trading and back testing phase, and you can immediately generate the reports, see end-to-end details about it. You can download the logs, which is going to show you how many number of trades were taken and how many number of trades went well. What is the report actually going to show you? It's going to show you end-to-end thing, which I've showcased you over the period of strategy. And when you would want to actually execute this trade by connecting to a broker, you can simply click start and it will connect you to Alice Blue Broker. So I'll just show you how you can link your brokerage account to. So you can just go out on the settings, you can go to the brokers part and you can just click on add brokerage part and you can just click on Alice Blue and you can sign in with Alice Blue. So the moment you click over here, you can click your client code and password and you can immediately open your account with Alice Blue, or you can directly sign in. So this is how simple it is. And talking about pricing plan, we people have some really amazing offers with our partners, with our partners Alice Blue, and you can access the pricing plans by visiting at www.aliceblue.algobulls.com. And our pricing varies from marketplace to marketplace. So we people have various versatile pricing, which starts from 1,500 rupees and can go up to 12,000 rupees depending on your need. And to know more about the pricing part, I'll be dropping in my details and Mr. Chaitanya's detail over the text section. So with regards to any of those questions, you can directly reach out to us over a call, and we'll be happy to help you. Apart from that, now I'll be opening the floor. Now I'll be opening the floor for questions. So if there are any questions, I'll be happy to answer all of those. Yes, Mr. Dinesh. So we could find many questions over the chat section. So
Yeah.
can you please show the Ichimoku strategy? Yes. So talking about Mr. Dinesh's strategy, it is currently under development and it is going to come live soon. So you can connect with me. Offline. I'll be dropping you the details, and as soon as the strategy is online, I'll keep you updated on it. So guys, if there is any question, we guys can actually Mr. Dinesh would be there to answer. Yes, so talking about the question by Mr. Kamal Gupta, yes, the strategy is going to get automated through Algo, and you will soon be able to see it on a marketplace. Yes, Mr. Dinesh, there is a question by Mr. Rakesh Kumar. Difference. His question is difference between 1180 and 1200 plan. Okay. Well, for that, I think so we can connect offline, because there are various different plans depending on what your requirement is, and we guys can help you with that. I'll be dropping my details over the chat section.
So Mr. Sudesh wants to know, can you please explain Kijun once again? So since we have time, I'll try to do that. Yes, just one second.
Yeah, sure. You can share the screen, yeah, Mr. Dinesh, if you want.
Yeah. So here is your. So this Kijun line that you see on your screen out here, this red line, this is a 26 period moving average. Now it's a weighted moving average of the last 26 periods. It works, in that range. So as if in Ichimoku, it's mostly used as a wonderful tool, number one, for trend direction confirmation. Number two, for a trail stop loss in our trades. Whether I'm doing positional, whether I'm doing intraday, whether I'm trading as an investor also, of course, then I would be using a higher time frame Kijun. So we use it from that purpose for the trail movement. And also the beauty about the Kijun is that if it goes very far away from price, when there is a massive spike, say for instance, Tata Motors. There you go. So, as you can see out here, the price, because of this massive gap up, the Kijun, because it's a 26 candle average, it takes its time to, join the entire trend. The result of that is that we have a smallish pause and pullback happening in the trend. So that's the impact which a Kijun has on a trend. It can pull back the trend, or it can make it go sideways when it goes too far away from. So that's why, if you're accustomed to patterns, to triangles, to box patterns and etc., that's a classic example where the price tends to go sideways till the Kijun joins the thing. So it's based on that. And in Ichimoku, we are able to measure the time it takes to complete its sideways move and accordingly start its trending journey again. So that's one of the key reasons to, if you want to explain to someone non-technical that why does a stock gives a big opening or goes very strong and then does a pullback, typically in a flag and pole pattern or in a triangle where it does this job. So it's the Kijun which is actually impacting it before it joins the trend like that. That's it, Yash. You can.
Yes. So do we have any more questions coming in? So there was this question regarding algo trading. So does it execute buy trade when the price is increasing, not when the decreasing? So it depends from strategy to strategy and how the signals have been placed. So as per, Mr. Dinesh, I would like if you could explain it with regards to your strategy.
Uh, See, our strategy would be completely based on uh, because we will be doing intraday. So we will be the strategy is made in such a manner that it will look at multi-time frames and it will execute a trade in either a 15-minute or a 5-minute or because our markets are not that liquid to do 1 minute time frame trading, it would be looking at 5 and 15 and execute trades on breakouts. That's one of the strategies. Apart from that, there is a pullback strategy. And the third strategy is the scalping strategy. That is, we join a trend and we will be in and out of it, as per the Ichimoku theory in advance. So all different combinations of the Ichimoku theory will be put in together and uh, offered in the marketplace accordingly.
Yes. And from the Q&A side, I think so we have a question. I think so that is already explained. Yes. So yeah, in case any of the attendees want to get their strategy listed on a marketplace or get their strategy built custom, so you can reach out to me directly via WhatsApp or via my contact, via email or contact number, and I'll be happy to help you out with that. So we have an invite-only marketplace where we invite strategists to come and get their strategy built, and we would like to build a community of algorithmic of multiple strategies being on our platform, wherein we bring in the algorithmic trading revolution in India. Apart from that, Mr. Dinesh, I don't find much questions, so I think so we are good to go.
Okay. Thank you.
So I would like to thank Mr. Dinesh for such an insightful sessions onto the Ichimoku session, and it was really insightful, and I hope all the attendees enjoyed it. And I would like to thank Alice Blue too for providing us this platform to actually present our strategy and present our platform. I hope everyone enjoyed the session, and all the best for tomorrow's trading session. So I hope everyone has an amazing day. Thank
Thank
you,
you for
everyone.
having me over. Thank you for having me.
Thank you, everyone.